How's it going, everyone? Welcome to the Proving Ground Mastermind. We're going to get started here in just a second. As you log in, please chat and let me know that you can see my screen and you can hear me talking. About 4 minutes, we'll get started. As you guys get logged in, let me know if you can see my screen and if you can hear me talking. Three more minutes, we'll get started here, guys. Just a couple more minutes. You guys are quiet this morning. Somebody chat. Let me know you can see my screen and hear me talking. If you guys have any questions while we wait, and of course, along the way, feel free to chat those in. Thank you, Brad. Appreciate it. Thought I was alone here for a second. All right, guys, let's go ahead and get started. Thanks for joining us. This is the Proving Ground Mastermind, and we're going to get started. So what I want to do for the next couple sessions, this session, maybe a few more, is to give you guys a trade strategy. Good morning, John. Give you guys just some simple trade strategies for those of you guys that feel like you need something, some type of direction. Before we start, though, I want to preface a lot of this by saying that the simplest things are generally what work. I know a lot of you guys have asked about Phil Hoy, who's a mastermind member, and he's been a trader with us for some time now. And the guy is a phenom. He comes from a trading background, corporate trading background, so he's used to the big numbers. He's used to having to sit in front of a screen and grind out in trading. He's not a big fan of trading, interestingly enough. Nor is he a big fan of teaching. I don't think he has the patience. But really cool guy. He's a rock climber, and he can do 300-400% in a month. Those are real numbers, and so for those of you guys that have asked, yes, it is true that 400% is not something that's difficult for Phil to do in a month's time, in 20 trade days or a 30-day period, however you want to look at it. And there are very simple, basic things that he looks for. Now, his technicals are on point. He's got really, detailed technicals, and he uses the indicators, of course, for entry. And if the indicators don't look a certain way, then he's not going to execute. Of course, there are other factors and variables that's playing into the scenario, like volatility, volume, what type of, what currency pairs you may be looking at, and so on and so forth. And although we're not going to talk about his strategy, and that's something that I think at some point we will talk about, and I'll kind of show you guys how to set up the technicals like he does, and so on and so forth. I think that'd be very valuable to you guys. But what's important to understand is that it's a very simple approach. After he's got all of his ducks in a row, what he looks for in the indicators and otherwise is very, very simple. The other stuff like technicals, fundamentals, volume, volatility in the market, those are things that are pretty static. Once you learn those things, you've got it. It's not like the indicators where they're nuanced, and sometimes they're saying one thing, other times they're saying another thing. It's not like that. The parts that make the approach very, very effective is static information that once you learn that information, it's applicable and you can use it in just about any scenario. It's foundation. And that's the important part, is establishing what that foundation is. So that being said, we're going to go off the preface that you guys have some level of foundation as I show you guys some of these trade strategies. Now, if you looked at these trade strategies, you could take them very systematically. Now, it doesn't matter if I point them out for you. Ultimately, it's still your job to backtest the times that you trade and determine if any of these strategies are even going to be useful for you or for the currency pairs that you trade. For example, today we'll be looking at the euro versus US dollar on the 60-minute chart. Maybe you want to try it out on the 240-minute chart because you understand how that chart works. Perfect. By all means, go right ahead. I'm going to show it to you on a 60-minute chart. It's very simple. By the time we're done with these, 3, maybe 4 sessions within the next couple of weeks, you'll have 3 or 4 systematic approaches to the market. You wait and look for just these things for these particular setups, and then execute. Now, my hope is that you backtest them and you try to figure out how relevant they're going to be for your trade strategy or for your risk appetite or whatever it may be. So today we're just going to look at these, and we're going to look at them being for a 5-pip trade, and this is just going to be on the euro versus US dollar, and I'll explain as we go. Now, as you backtest, obviously you want to pay attention to other factors, right? Because it's more useful that way, so you're not having to go back and forth millions of times, but try to capture all that information up front. If you like the TNTs, look at the TNTs. That's something that we'll work with later. We'll look at TNTs, and these are more nuanced and directional, or we can call it logical or reactive type setups, right? Just kind of simple lay down type scenarios. Now, they don't always work out, right? And that's not the point, is to give you something that's always going to work out, because it's impossible. There's nothing that always works out. The point is to give you some direction. So today what we're going to do is focus on pressure as our lead-in. When we see pressure do a certain thing, then we're going to look at major minor. So I want for there to be a change in position in pressure. Right now, green is on bottom. I want for green to just pop on top of red. And when that happens, during that candle, if green is popped on top of red now, then I want to see if at the end of that candle, major and minor are pointed up. Doesn't matter where they are, just as long as they're pointed up. And when green pops on bottom of red, if it's on top and it pops on bottom of red, I want to see major and minor pointed down. That's it. There's other rules and stuff that you'll want to pay attention to, like how long major and minor have been overbought, for example, or oversold if green is just popped on top or bottom. But in your back test, you may find that it doesn't matter. So I want to give you these strategies, but it's up to you to make them your own. It's impossible to just give you something that's cookie cutter right out of the box that you're just going to be able to run with. I mean, you can just take this and run with it and execute every single time and just throw caution to the wind and see how it works out. It may or may not work out well for you, but it's better to know. It's always better to know. If you're not willing to do the back test and you're not willing to do the work, you're never going to be successful as a trader. Just pack it in, quit spending the money. You're just going to continue to, chase your tail and hope that, someone lays something in your lap that's just absolutely perfect and that, it's just going to work every single time and it's going to, and it's never going to happen. So you're just going to waste money. And obviously that doesn't benefit me or any of my colleagues or anyone else to tell you that, because some of you guys are that way. You're just waiting for the easy pill. If you're waiting for the easy pill, it's never going to come. And by the way, if you're waiting for the easy pill in this, then there is no way that you'll ever receive it. Just go get a job, put your head down, and work for the rest of your life until you die, because you'll never get any better than that. Even if you hit the lottery, you'll spend it, it'll be gone, you'll be in a worse situation you ever were. I'm not kidding. That's just the way it is. It's just the way it is. Until I see it differently in more than just a few occasions, then I'll believe differently. But in my experience and in meeting lots of people and understanding kind of the psychology of things and how we're attached to money and what have you, that's just the way it is. Now, for those of you guys that want to put in even just a little bit of work, it's going to be worth it. This is possibly one of the easiest things. Day trading is possibly one of the easiest things you'll ever do in life that has such a huge reward. I've had people quit their jobs, and which I would not recommend, by the way, but quit their jobs and completely dedicate themselves to just learning one or two strategies that would pay off for them in trading, and they did, and they're successful, and it hurt for a little while, and they had to sacrifice, and they had to beans and rice for a little while, but after a little bit, their whole lifestyle was changed because they decided they were going to dedicate, their life to, not their life, but their career to trading, and we all know we have to work, we all know we have to make money, so on and so forth, right? But versus spending 40 hours at a job, maybe they spent 40 hours doing this, just learning, not trading, just learning. And then once they mastered something, then it was time to go into the market and start trading it. I was tracking my son's, just to give you an example, my son's habits of exposure to technology and his phone and his iPad and video games. I mean, we've got every console you can think of, and I just see that he's very plugged in. He's always, playing video games or on his phone or on an iPad or something. There's always some type of connection or engagement to a screen. And so I tracked it, and there was a week where there were over 40 hours that he spent on, that I just noticed, right, that I was around for, on his games and on his phone and so on. As the weeks get busy, him and I, we just kind of, cross paths every once in a while. Sometimes, when it's during the week, I'll get home and, obviously we'll say hello and have dinner together, but for the most part, it's like, okay, he's off doing his own thing. Yeah, right, Paul, only 40. Well, only 40 that I know, that I noticed, But there was all this engagement in all these things, all this entertainment and what have you. And, what I realize is that we're kind of the same way as adults. We do what we think is necessary, by way of our jobs or whatever it may be to bring in income, and we convince ourselves that we have to do those things. But then we need our respite. And so, we go home and we perhaps sit on the couch and watch television or, play on our phone or whatever it may be. But there's not a lot of time that's dedicated to personal development, whatever it may be, going to the gym or, being cognizant of the things that you eat or watch or, trying to develop or grow in anything, for example, trading. And I think it's only when you find immense value and certainty that what you're spending your time in is going to reap benefits that you change some of that and you are willing to sacrifice. So that's why I want to tell you guys that trading is not something that some people can do and other people can't. It's not one of those things. It's not one of those things like being an NBA player or a famous singer or, a football star. It's not one of those things. The industry will have you believe that because it's to their advantage, right? And you just want to kind of try it out to see if it's right for you, right? Now consider if whatever you're doing, let's say you're making $60,000 a year right now, and you work construction and you've never sat behind a desk in your entire life. And somebody says, hey, if you sit behind this desk and you do this job, I'll teach you how to do it over time. If you do it, I'll double your income. You'll make $120,000. You're not going to work construction anymore. You can do this other job over here. And you say, well, that but it's worth giving it a shot, right? And so you sit behind that desk and you do something you've never done before, but you figure it out because you're going to get paid $120,000 to do that, double whatever it is that you're currently making. And so you're going to figure out how to do that. You're going to put time, effort, and energy. You're going to put brain power into figuring out and stepping out of your comfort zone because there's some type of monetary benefit. And usually that's the things that make us move is the monetary benefit in terms of employment. And it doesn't matter if we're more miserable in that job than we were in the previous. Twice the income is worth the misery sometimes for some of us. Definitely not me. That's never been worth it. I've taken pay cuts to do what I've loved. I've done stuff for free to do what I love. Now it's different. I trade, and so the monetary benefits aren't as important. But the point is that trading is one of those things that you can be trained on how to do correctly. And if you're not doing it correctly, you're not going to win. If you're trying to master a million different things and you feel like you're being pulled a million different directions, you've got to just kind of sit tight with one of the approaches that you think fits you the best and run with it. Let me clarify that for a moment, and then we'll get on to this trading strategy, this trading approach. Understand that just because something sounds good doesn't mean that it's right for you. And if it sounds easy and simple, most of the time, it's probably not the correct way to do it. It's just in my opinion, in my perception, in my experience, that's the way it is. The easy stuff is never the correct way to do it, in my experience. And simple and easy are different, right? Simple trading is simple. It's not easy. It's simple. Once you figure out and master some of these processes, especially the foundation, which the foundation you could be done with in 9 weeks, right? That's what coaching is for. You learn those foundations. And then after that, it's like, okay, let's learn some ways to win. And then stick with them, right? But when you've got a million different things, you hear one thing from me, you hear another thing from, another coach and even another coach after that, and you think that you've got to use all of those things in order to be successful. You're wrong. You could not do anything that, with the exception of foundation, you cannot do anything that I teach you in terms of execution and just do something that one of the other coaches teaches you and be successful at trading as long as the foundation is there. If it doesn't adhere to foundation, and it doesn't matter where you learn it, then don't do it because it's not going to work, no matter how good it sounds. And when evaluating what is right for you, don't always go with what sounds good. Oh, yeah, I want 100 pips, so I'm going to do whatever that is. Or I want scalps, so I'm going to do whatever that is. Or I just want a 10-pip trade, so I'm going to do whatever that is. A lot of times it doesn't matter what you want, not initially. It doesn't matter. It's what you need and what fits you, right? Because if you were asked just by, someone, well, what do you want in life? And I'll just give it to you. Well, of course you're going to be, this is what I want. This is what I want my life to look like. This is what I want my finances to look like. And then somehow just be endowed with that. That's not the way it works, right? You got to go and work for it. And there are certain things, everyone has that line in the sand that they say, well, I'm not willing to do that for money, or I'm not willing to do that for a living, or whatever it may be. Well, it's the same thing with trading. You think that maybe some of these things sound good, but you're not willing, or your personality is not, aligned with that, or your risk appetite, or whatever it may be, is not aligned with that approach. And so it doesn't matter how much you try to force it, you're not going to be that, at least initially. Maybe later, if you can develop and acclimate into that. But initially, whatever your risk appetite is, whatever your personality is, that's what you want to adapt your trading to. And I say this to guys all the time. Can I do 100 pip trades? Yes, I can. I'm capable of it. But do I? No, because it doesn't fit my personality. It doesn't fit my risk appetite. I don't like being in trades for a long time. That's why I do 10 pip trades. If I knew, beyond a certain, shadow of a doubt that I could do 100 pips in the time that it would take me to do 10 pips, and I can do that regularly, sure, that's what I would do. Because it's more about the length of time that I'm in the market. I don't have the, I would say that, compared to the rest of the industry, I don't have the right personality for trading. I'm impatient. I want things now. I want to be able to analyze, execute, get in, get out, and be on my way. If I have to be in the market for more than 45 minutes, then I just want to get out of that trade. I'm done. I've already spent too much time. And, some people may look at that and say, well, if you just wait a little bit, I get that. I understand. But my patience has a limit. And beyond that is not comfortable for me. Can I force it? Can I push it? Yeah, and I do on occasion, just to kind of stretch and grow in that regard. But I'm not going to make it my primary source of trading if I've got this other approach that works and fits my strategy, my trading strategy, my risk appetite, my personality, so on and so forth. So you got to consider the same things. If you put in something larger than a 0.1, are you comfortable? Right? If you take a trade that's more than 10 pips, are you comfortable? Or if you take a trade that's, less than 50 pips, are you comfortable? If you can really dig in and figure out what the answer to those are and how you feel, yes, how you feel as you're trading at those lot sizes, or at, for that many pips, or however long you might be in the market as it, ebbs and flows, or how far is too far to be upside down in a particular trade, or whatever it may be. Consider those things when you're looking at what your approach should be. Obviously, you want to make sure that whatever you do is scientific and mathematic, which again goes back to foundation. Once you have that foundation, then you can really start to develop what your approach is going to be in the market. All right, so again, I'm going to show you this stuff. I'm going to show you some things, but you really need to make it your own. You absolutely have to make it your own. But if you're complicating things and you're working with too many charts and you're watering the process because you're wanting to learn, every new thing that comes about, you're always going to flounder, right? Because you're always kind of running to wherever wherever the hype is. Oh, I've got this new thing, and it's really cool and interesting, and I'm winning a whole bunch of pips with it. All of a sudden, you're running in that direction. They're abandoning everything you've done to that point, and then starting brand new with a whole new approach, and then just trying to take it right into the market before you figure out how to use it. And then, of course, you don't have a lot of success with it because you don't understand it. And then something else comes about, and you're like, well, that's not working very well, so I'm going to run over here instead, and I'm going to go look at what this other person is doing, or maybe I'm going to try to marry the 2 or 3 from different coaches and until I can figure this out. When really, whatever you were doing in the beginning, you could have mastered by that point and been making profit in the market at a 50% win rate, if that's what it took. Obviously, you shouldn't be at such a low win rate. These indicators, I mean, you could do a piss poor job and be at 70%. You could totally suck at this and be at 70% win rate and be making money hand over fist. I mean, if you went to the majority of the market, especially guys that are making millions in the market with 50% win rates, and told them you had a 70% win rate, they're expecting that you're living the high life, right? If you're putting up numbers like that, especially for any significant amount of time, and if you have back testing to prove that even beyond the time that you've been trading that it's successful, forget it. That's gold. You're sitting on a golden ticket. How much better 75 or 80 or even up to 90%, right? I mean, 80% is astronomical. It's unbelievable. People don't even believe that, much less 90. When I say 96%, people are like, yeah, you're a liar. You're full of it, right? There's something wrong with that process or whatever it may be. All right, let's get into this, guys. So we're going to look at a 60-minute chart, euro versus U.S. dollar. We're just going to look at the major, minor, and pressure for this particular systematic approach. However, when you're back testing, make sure you are cognizant of TNTs and you know, anything else that you might be looking at. Perhaps if you want to use a shorter-term chart for positioning or whatever it may be. So again, all we're going to wait for is our first trigger, which is green to pop on bottom or top of red. And see how that goes. So let's go forward and see what there is to see here. All right, so you can see we've got positive convergence. Green is starting to lean into red, and it pops on top of major, minor, and not pointed up. So if green pops on top of red, major, minor need to be pointed up. If green pops on bottom of red, major, minor need to be pointed down as soon as it happens, okay? So we're using the pressure as our lead-in. We're waiting for that certain thing to happen in this particular setup. So if I had 3 or 4 setups just like this, right, that I've mastered and I figured out work for me, you know, with whatever parameters that I use, I could look at the market very systematically. Right, and just say, okay, when I see this setup, if I've got, let's just say, 3 different currency pairs, you know, that I like to trade during certain hours, I can have those 3 set up and then just see if one of those setups are happening. So let's go to an example of one of these first of all. So green popped on bottom right here. You can see that if I maximize that, green popped on bottom, right? But major, minor were not pointed down. And then right here, green popped on top, and major, minor pointed up. Well, minors are kind of sideways, but so right here we'd be looking for a long trade, not a short trade. We'd be looking for a long, even though major, minor have been overbought. And we, you know, if it's questionable, you know, don't risk it. If you don't like the way major, minor look, or you don't like the way pressure looks, then don't risk it. But that's going to go back to you actually back testing it, okay? And so let's just say a 5-pip trade. Let's just call this a 5-pip trade. We won't talk about drawdown. If we did, let's just say like a 3-to-1, right? So that means like a 15-pip stop, 5-pip trade. Oh, I did. Yeah, thank you. So let's look for our next change in position on pressure for our entry. So this goes back to what we were working on before, right? With pressure and then making major, minor, and then adding major, minor into the equation. Both major and minors, or can we just use the majors? Paul, that's a great question. For this particular exercise, we're going to use both major and minor, but let's look at both. Now, we're only going to count for when major and minor agree. However, let's look at both, Paul. That's a good question. So here we don't have them pointed down. Green just popped on bottom. So it was on top right there. Popped on bottom, but we don't have major and minor. And then green pops on top. If I maximize that, you can see green's now on top, and it wasn't previously. So we go back. You can see it's on bottom. So let's do this actually. Let's see, is this chart following us? No. Let me link this chart. Scroll position. By the way, guys, if you haven't changed your charts, they need to be to 2200. So let's go and look at your USD symbol, for example. Right click, go to chart settings, right here, 2200. If you guys are using the MASTERMIND settings, then it's 2210 seconds and then 2200 flat. This is what your times should look like for all your charts. If you link your charts based on session time, and they're all linked number 1, session time, you only have to change one of these, and then all of them will change to the 2200. So just a heads up. Okay, so let's go back And what I'm going to do here is just maximize this so we can see when pressure is on top or bottom as we go here. Okay. So as we're looking at this, if it's questionable, we'll just look over here to see where pressure is. I've got it blown up. Okay, so green's on top now, and major minor pointed up. So we buy, and let's just say again 5 pips, right? So did we get 5 out of that? Yeah, 9.3, and it went 10.7 again. So it's a 2 to 1, right? 2 times the drawdown for 1 time the profit. So if we're using a 3 to 1 here, then we'd need to be in the mid 80s, 3 to 1 ratio. We need to be in the mid 80s, a 5 pip take profit, 15 pip stop. Now, if you guys may want to take more than that, maybe you want to take, you know, depending on what currency pair you're trading, but again, that's up to you. We're just using this as an example of a 5 pip take profit. Now, right after that, green popped on bottom and major minor pointed down. So after this buy, green popped on top, major minor pointed up. We got some movement up for 5 pips, and then now major minor pointed down and green's on bottom. So we're going to sell for 5. And that one moves 10.4 with about 1.1 drawdown, so we got that one as well. So let's keep going here. And all I did was went back to January 1st. So if you notice, if I go back to 2018, January 1st, which is right here, I just waited. I started from right here and waited for green to change positions. And the first time it happened was right there, but we didn't get major minor pointed up. And then right here, green pops on top, and that's the first instance where green pops on top, major minor pointed up. So this is completely random. It's not, and then I just went forward and started making marks where it happened, right? So just so you guys know kind of the process that I used here. All right, so let's look for the green. Again, we're looking for pressure to give us our entry. Green pops on top. We can see that right here, and major minor pointed up. So we're looking for a long trade for 5 pips, and that one moves 6.8. So that's enough to take a 5 pip trade. That's 2.1 against, so we got our 5 there as well. Let's look for our next. Here again, green pops on bottom, major minor pointed down, so we're looking for a short trade, right? You'll notice that previous, green is on top, post, green's on bottom. So just to give you an example, let's replay this chart. And mind you, these are not always going to work out, guys. This is not 100%. There's no such thing. Just figure out if it's something that's going to work out for you, and obviously be cognizant of announcements. If there's an announcement coming or new volume volatility of the market, things like that, you want to be cognizant of those things. All right, so I'm going to replay this to show you where we would execute this particular trade, right? And then, you know, to take a short. All right, so let's go here, single chart, play. So that's going to play this red candle right here. And we're waiting for our trigger. So back here, this candle just ended, and as this candle began, green pops on bottom. So right now we have like an hour to evaluate. And this is what we're evaluating for this hour. Is green on bottom of red? Yes. Did it just appear there? Yes. Are major and minor pointed down? Yes. Now, if they stay that way for the duration of this hour, then we're going to short for 5 pips. Okay. Now, if you have of course, if you have other things like positioning or support and resistance, whatever else you're using, by all means, use those things. This is just, you know, one thing. We'll be talking about other ones that are similar to this. Okay, so then we're not executing yet because this is still forming. Green just changed positions, and we're not even certain if it's going to stay that way. This hour just started, so let's speed it up. Let's go 100 times the speed, and let's go towards the end of the hour. So let's say that you're watching, and oh goodness, wrong chart. You're watching this, and you're now waiting, or maybe you got into this, you started looking at this 30 minutes into this candle, or you just started looking at it now. You're like, okay, everything is there. When you snap back, you notice green was on top, now green's on bottom, major minor pointed down. So now you're just waiting for this candle to end to make sure that all that stuff stays there, kind of like a pattern, right? So this is a systematic type of trading. It's not pattern because we don't need major minor to make any certain type of pattern. We just need them to point in a certain direction. We don't need pressure to make a certain type of pattern. We just need it to have done a certain thing simultaneously. So in this particular instance, all we want is for green to have popped on bottom and major minor to point down, or green to have popped on top and major minor to point up. So in 12 minutes and 57 seconds, 11 minutes, 10 minutes, 9, 8, 7, we just want to make sure that all those parameters that we're looking for are present. So in 42 seconds, now we just want to make sure, has green just changed positions? Yes. And are major minor pointed down? Yes. If that stays that way in 40 seconds, we are going to short or sell. So we're not doing it until this happens simultaneously. Green pops on bottom, major minor pointed down, or green pops on top, major minor pointed up. Not that green is already on bottom, but has just gone to the bottom. That's why it's our lead-in, or is already on top, but just popped on top. Yes, Brad, execute when the candle posts. So in 15 seconds or so, right? 10, 9. So now you have your finger on the trigger to sell in MetaTrader 4, and in 4 seconds, 3, 2, 1, you press the sell button in MetaTrader 4, and I'm just going to draw a line where our sell would be, and we'd be looking for 5 to the short side on at the start of this candle right here. So that would be 1.20542, and let's account for spread. So that would be 5.3 flat. So right there, just to play it safe, because that would be 1.2 pips of spread. Don't pay attention to this. This is a live candle. We're just looking at this one right here. Okay, so let's speed it up and see how we did. Obviously, we don't want to hit that 15 pips a draw, which would be way up here. We want to hit our 5 pips short first. Let's go 100. Been in this for almost 30 minutes. Now over 30 minutes, not profit, or in profit, but not, there we go. We took profit. So it took about 40 minutes, 39 and a half, 38 and a half minutes or so, and got out of that trade. But you see, that's where you would execute. So you're evaluating this. So let's go back, right? Previously, green was on top. Our first trigger is that green changed positions. So now green has changed positions. After we see that, our major and minor pointed down. If they aren't, then we're keeping an eye on it to see if they do start to point down. If they do before this hour is up and green just popped on bottom, stays on bottom, then at the end of that candle, the beginning of the next candle is where we'd short or sell. If major and minor don't point down, then we don't do anything. And so let's keep on going here. I'm going to play that and go back here and speed it up so we have more room here. Okay, let's erase these lines. Okay, so I showed you guys where the execution would be. This is based on this exercise, right? If you guys are positioning or anything else, you know, it's up to you. But I just want to show you this so you guys have something you could go into the market with and start looking at and back testing. That's very systematic, right? And it may not be 5 pips, it may be whatever it is, but just make sure that the math works out, right? So if you back test this and it only performs at 80%, then you know a 3-to-1 is pushing it. Because if you take, let's just say 10 trades, and you've got 5 pips per, then that's 45, right? If I'm not mistaken, 8 times 5 is 45, right? Let's see, 30, 35, 40, or is it 40? Sorry. Yeah, 40, sorry. 40 and then 2 losers at 15 pips, then that would be 30. So concurrent losers would suck, right? Because you only have about 10 pips of profit here. But the math works long term, so you would be profitable with that. If you could figure out how to get more or take less draw, that would be better. That would be optimal. But again, that's based on your back testing. We're just looking at this systematically. All right. So let's go forward here. Look for the next setup here. So green's on top, but major minor are down, so we do nothing there. Green's on bottom. And here's one right here, Paul, where green's on bottom and majors are the only ones pointed down, right? And so let's look at this, because this is actually a pretty good setup. But and if you guys notice, we actually have what we were looking at last time with thick orange. We have a red candle and majors are thick orange is pointed up, which makes it more predictive to the short side. So if we were looking for one other point of validation to short this particular instance, majors crossed and pointed down, green just pops on bottom, thick orange is up, yes, up, and blue dotted is down, but we have a red candle. That actually gives us a predictive, or let's call it illogical indication the market is going to short. Even though these are saying long, that's giving us an illogical or predictive indication that we should see some additional sell or short. In combination with thick majors cross and pointed down and green just popping on bottom, we have a lot of validation here to short. Now, it's not what we're looking at today, but Paul had brought it up, so I wanted to look at an example of that. So let's just assume a short right here, a sell. And that would have moved, there's 2.5 drawdown and 23 pips short. Not too shabby. Okay, so let's look for our change in position here on pressure. Green's on top, and major and minor are crossed and pointed up together. So right here we'd be looking for a long position. And that one moves 12.1. I'll be adding this to the syllabus as well at the end of the syllabus. So for those of you guys that are following the syllabus, this one will be on there at the end as well. So let's keep on going. Let's look for our next example here. There's a change in position. Green popped on bottom. Majors are more sideways, so we're not going to use this because they're minors are pointed down, but majors are more sideways. Not to say that it won't short, but we're not going to use this example, right? Because it's not what we're looking for. We need major and minor to point down, or at least majors. If you're back testing that particular example, but for this exercise, we want both major and minor to point down. We don't have that. Market's still shorted. Only went about 4 there. And then that would have finished us off, but again, we weren't looking at that one as a viable example. Green pops on top, major and minor pointed down, so we're not going to use that one either. Green is on bottom. You can see it right there, just barely. I mean, that one's tough, right? And if it's questionable, skip it. But it does follow the rule, so we're going to look at it. But if it's questionable for you, it's probably better just to skip it. This is, yeah, anyway, we're just going to look at what happens. But green's on bottom, major minor pointed down, so this does fit the bill. We'd be looking for a short. And look at that, busts up on us. Let's adjust that, see if we got nothing to the short side, 0. So all we got was long, and that's 20.7. That would have been a bust for a 5-pip trade for sure. Now green's on top, popped on top, right? You'll notice that it popped barely on bottom, and then it came back to the top, and major minor pointed up. So immediately after that, we're looking for a buy, and that one was much more convincing. That went 12.9 and about 1.5 drawdown. Okay, so let's continue. And so green had already popped on bottom, major and minor were not pointed down, so we didn't do anything there. Even though it looks like it just popped on bottom, it actually popped on bottom You see it's on top right here in this example, right? And then on the very next candle, it's clearly on bottom. If I'm blowing this up, it's on bottom now, but major and minor not pointed down, so we're not using that. Let's go to our next example. There's some negative convergence right there, and green's on top, major and minor pointed up, so we'd be looking for a long. Yeah, let's see how this one goes. Okay, that one went against 8.3, only 1.5 in favor. Let's see if it goes 15 before it goes 5 up. That's more luck than anything, right? It's probably an announcement or something. Got us out of the trade, but we're not going to, I mean, can't really count that. That's obviously some type of announcement. So, you know, let's not reward ourselves for bad behavior. Wasn't a loss, but, you know, if we knew that there was an announcement coming, you know, would that have been something that we would have played with? And so that's kind of what we have to ask ourselves in that situation. But nonetheless, let's move on. Look for the next setup. Green is not on bottom. Majors are pointed down, but it look like it, but they're kind of touching right there. The green's not on bottom yet. It's likely that it may pop on bottom on the next candle, but it's not there yet. It did pop on bottom, major and minor now pointed up, so we're not going to use that one either. Now it popped on top, and major and minor pointed up, so now we're looking for a long trade or a buy, right? That moved 2.2 and then 13.7 against. Not enough to stop us out, but it's definitely not looking promising, right? And there's our finisher, so that would have stopped us out, 17.4. Let's wait for another change. There's a change in position, green on bottom, major and minor not pointed down, so we're not going to do anything there. Let's wait for another change. Those are touching, green's not on top yet. Now green's on top, major and minor pointed up, so let's look for that long trade. And that one went 19.8, zero drawdown. And let's look for our next. Green's on bottom, and major and minor pointed down. So we'd be looking for that short. And that's 12.9 with about half a pip drawdown. All right, so let's see. Green's not on top yet. Now green's on top. Majors are, ooh, this one's tough. This is a good one. This is tough. Majors are pointed up. Minors are kind of pointed up. Green is on top. They've been oversold for some time. We got a little bit of drawback right there. Thick orange was actually working contrary to the red, right? Because you can see that as thick orange is moving up, look at this. So right here, we have an example of that predictive element, right? Majors are pointed down, minors are actually up. Pressure is down, thick orange is up, but the market has moved down. So this is telling us predictively that the market is still going to move down. This is giving us a predictive trade. The market is still signaling short in combination with what we're seeing in major and minor, because majors are still down. Minors are actually trying to buy, and pressure is down. So we're looking for a short in this situation. So I'm going to walk you guys through this real quick. So we're looking for a short. That's not telling us anything. That's flat. But let's continue and see what happens next. Right here, thick orange up. Majors kind of in a hiccup, right? Not really buying or selling, and minors trying to buy. Pressure still pointed down. It is negatively converging, but there's still a lot of cause for short right here, especially with this predictive. Now, this is not working as predictively here, mainly because we have kind of a doji right here, or it started where it ended. And so we probably wouldn't trust that as much in terms of the TNTs for a short. We'd probably trust more of this and pressure than we would the TNTs, just because we have a doji. But if that was a red candle, more body, then we would definitely use that for a short, right? So there's more short right there. Now we have this double confirmation, major minor pointed down. Thick orange is still pushed up and blue dotted down, right? Which means up here, but the market has moved down. And majors are pointed down, minors are pointed down, and pressure is really starting to negatively converge. However, it's still pointed down. So we can still see some cause for short. However, we've kind of run out of runway here, right? Because we got double confirmation on major minor, and a lot of times we see this. We know that there's still possibility of a little bit of short, but we're going to look to get some give back here as well. Right, so this is what makes this one tough. Let's go to the next, and we can see that we got some short, right, 6.8, but we got some give back as well. And now we're flat. Majors are kind of crossed and pointed up. Minors are crossed and pointed up. Green just popped on top, and so we could expect some more give back here, and then we wait for this to get to that 0, right? And then we'd know, okay, that run's probably over, and it's time to go back to the other direction. And I realize that what we're talking about now is kind of complicating the exercise that we meant for, but sometimes you got to kind of look at the whole picture. All right, so does this follow the rule? Well, that's more, based on your perception. If you feel like, yes, it follows the rule, that green, that minors are pointed up and majors are pointed up and green just popped on top, then yes, we'd be looking for a long trade. So let's go based on that perception and see what happens. And we get that push up, and that's 7.3 pips. If we did not get out of that trade right there, and we understand how this thick orange works, we're pulling our profit, because now we're expecting this to go the other direction and reactive. That means that we're expecting at least some short, even though the market's cooled down a little bit, we're expecting short and for thick orange to now point down. If it flattens and goes sideways, then we may very well get another green and then a larger red later. But let's see what happens, just to kind of run its course since we're looking at it. But that one would have been just fine. Okay, let's go forward. And reactive and red candle, kind of like we expected, or at least I expected. Okay, let's look at another example here. That one was tough, but it would have worked out. All right, looks like we've got some convergence, negative convergence. See if green pops on bottom. Green does pop on bottom, but majors minors go the opposite direction, so we're not using that. And no change in direction. You can see our position. Still no change in position. There we go. Green on top, major minor not pointed up, so we do nothing with that one. And let's look for another one here. Green's on bottom, major minor, it's rough, but major minor pointed down. So let's play that out, right? And we haven't hit 0 with thick orange, so if we need more validation, we could see that there might be some short right here, right? It looks like we obviously had some announcements, but this would fit the bill. Green popped on bottom, major minor pointed down. And we've got 22 pips to the short side, 12 pips to the long side, so that would have been a successful trade. Even if we drew down first, we didn't go 15 pips, we would have been all right. All right, so let's go and look for our next change in position. Whoops, let me mark that. Right there. Green's on top, major minor not pointed up, so we'll skip it. Green's on bottom, still not pointed up. Obviously, you guys can see what that may be. We're not going to talk about that today, but of course, we short. It's called hiccup pattern, if you guys don't know. We've got majors hiccup, minors crossed and pointed up. Green just popped on bottom. Green's on bottom of red, and we got a contrary candle, so that would be a short. But we're not looking at that, so let's look for a change in position. Green's on top, major minor pointed up. So right here, that would be a long. And initially we go 3, not enough. 9.8 against. Let's see if we can finish this off with a profitable trade. Nope, in neither direction. And that is lucky, right? Because obviously an announcement for 64.3 pips all of a sudden. It went 12 against, 12.2 total against. So pretty close to stop out, and it could very well have gone up first, but nonetheless, again, would have been lucky more than anything. All right, green's on bottom, major minor pointed down. So here again, we'd be looking for that short. Hopefully it happens quick, right? Oof. 3.7, 6.1. No profit yet. Let's see if we can squeeze out a little bit. It's not looking promising, but let's see if we can squeeze out a little bit on the next candle. 4.7, not enough. 12.7. Let's see if we can finish this one with a profitable trade. 10, nope. Let's see how it goes. And 7.4. Man, after 4 hours, that's just tough. That's tough. Yeah, almost a stop out right there, 12.7. That would have given us our profit finally. Okay. Let's do one more. Of course, if you guys have questions, feel free to chat those in. Try to look for one more here. Okay. So here's another one where majors are the only ones that are pointed up. Minors are fatigued. If we go back, they were not overbought already. So they just arrived overbought. Majors are pointed up. Minors are fatigued. Green just popped on top. So we know there's still room. There may be a little bit of room left for a long. This looks like it may have been an announcement or something. So we, obviously want to err on the side of caution because we could very well pull back and get retraced. So, but let's look at what happened. This would not fit the bill for what we're looking at because minors are not pointed up. However, like we said before, if we wanted to test to see if all we need is majors to point up and green to pop on top, would that be effective? And so let's look at it. However, we're not going to mark this because it does not fit the bill. We want both major and minor pointed up and green to have just popped on top. So let's go forward and look to see what happens. And that would have been clean, right? 24.5 with minimal drawdown, not even a pip of drawdown. Okay. We got time for one more. Let's look at one more. I'm glad we found one that was not ideal. All right, green's on bottom, but major minor not pointed down. And when you guys are back testing, if you guys are familiar with what's happening, right, in these particular scenarios, and you're using green, I don't want you guys to think so linear. Think outside the box. And if you pick up on stuff like this, mark it, right? What's likely to happen in this scenario, based on what you know of the behavior of major minor after having resided overbought after a hiccup pattern. So here's a clear hiccup pattern: green down, red up, minors crossed and touching the threshold, green on top, and a contrary candle. So we're looking for a long, right? And then after that long, our follow-up would be for major minor to both point up. As long as majors don't leave the overbought, that follow-up is still in play. So majors are now up, right? And we got the up like we thought we would. Minors are not up yet. Now major and minor are both up, but green popped on bottom. The likely scenario here is that we're going to see a short. Obviously, it would bode well to position, but if there is no positioning to be had, then we'd look for a short. It moved 14.2 and then it moved 22.5 in our favor. Again, we weren't looking at that as an example, so we're not going to mark it. But again, I want you guys to pay. The reason why we do these types of exercises and I give you this kind of stuff is because I want you guys to see some of those nuances and try to apply it to other disciplines. Could what we talked about today work systematically and make you profit in the market? Yes, this could potentially make you rich. It'll take a while, right? And it's not going to happen overnight. But if you could knock down 2 of these a day on 3 different currency pairs, 10 pip trade in, let's say, less than an hour, and you're knocking it out at 85% win rate, 3-to-1 ratio, you're doubling your account every 40 trade days. Can that make you rich? Well, yeah, of course. How long it's going to take you to get there is relative to the amount that you have in your account when you start doing this. Don't try to overtrade it. Don't try to, this, I'm just going to do it every single time it happens. Maybe. If you've back tested and you can see that that's, significant, then by all means. But whatever your rules are, whatever you've back tested, only do that. Don't get greedy, right? And you guys learned that through coaching, right? There's boredom, there's greed, there's fatigue, there's a lot of emotions that go into trading and into how psychology affects your ability to trade effectively. And so don't let those things get in your way. Whatever you test, whatever you go and do, make sure that it's scientific and mathematic. This looks very appealing, right? We only went through 12 days of 2018 and we only had 2 losers. Everything else was a winner. I don't know how many times we hit, but just to put this into perspective, to hit an 85% win rate with just these examples, which is not enough to be deemed scientific. That's only 12 days, right? But in order to have an 85% win rate, we would need 8.5 winners for every loser. So that means that I would need 17 winners to justify those 2 losers. Did we have 17 winners? Did we even hit 85% with just the first couple days that we looked at? So let's look just really quickly, because I think we marked every single one of them. So let's just double check here. So clean chart. There's the range right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. And we had 2 of those lose out of 15. So that means we'd still need 2 winners, and they'd have to be concurrent in order to hit 85%, right? Because right now we have 15, and that would be, I'm doing the calculations, that would be an 80, actually that would be 2 losers, 15, so 13% losing rate would be 86.7, 86.6 and some change. So yeah, I guess we're okay. Let's move that back. So here I thought we still needed to hit 2 more. But 2 is 13% of 15. So if we minus, let's just say 14, it's 13.33333, so let's just say 14%, then that would be an 86% win rate. But is that scientific yet? No, because we only checked for 12 days of 2018. That's hardly representative of market conditions long term. Maybe January was just a good month, and the first 12 days was just a good month for this, or maybe it was a bad month, and this will perform better. But regardless, it's irrelevant to you if you're not going to trade them every single time, and you're not. You're not going to take every single one of those trades. So if you've got, and it may not work that way on the 3 currency pairs you want to trade it on. And so when you backtest, maybe you want to backtest, your 5 or 6 favorites and decide, okay, which one of these am I going to use this on? Which ones does it perform better with? And how am I going to best utilize this to fit the times that I trade, and so on and so forth. But it's very simple to backtest. It's very easy. You've got your parameters. You can add whatever you'd like. I obviously wouldn't recommend subtracting anything, but if you find that the times that you trade all you need are the majors and the minors are just a bonus, awesome. You know, whatever it is, but you've got your heading, and this is very reactive. So this is not what we usually talk about in terms of like predictability and things like that. This is very reactive type trading. The majors and minors are pointed in a certain direction, and green is giving you short-term bias. So in terms of the pressure indicator being your lead-in, that is more nuanced, right? And then all you need is your major minor to agree with the short-term bias, and then you've got your trade. Add whatever you'd like, you know, support and resistance, TNTs, whatever it may be. But you have your heading. If you don't have something that you can explain why you won in the market and what parameters you're looking at, if you like the systematic approach, by all means. Some of you guys, I think, may try to overthink things or try to use the indicators just fluidly, and you don't understand them well enough to do that, and so you end up in trouble. But for a lot of us, I can't think of one coach that didn't start with a very systematic approach, and that was just looking at major, minor, or whatever indicator they understood and waiting for them to do a certain thing before they executed. And then from there learned and grew as a trader and added to the repertoire. All right, guys, that's all I've got for you today. I will be adding this along with the other couple that we'll do in this kind of on the same topic, which is just kind of a systematic trade setup. Next time we'll use maybe TNTs as the lead-in, and maybe pressure or something as the trigger. I haven't decided which 2 or 3 I'll roll out to you guys, but whatever it is, I just want it to be very simple and basic and something that you guys can identify at a glance and very easy to backtest. All right, thanks for your time, guys. I appreciate you guys being here. If you guys have any questions after this, of course, feel free to email me. You can send it to Hiram, Hiram, at daytradesmart.com. We'll be doing the Proving Ground review tomorrow at 7 p.m. Mountain Standard Time. If you guys are planning on attending in person, awesome. If you guys are unable to, whether you're out of town or just can't come to the office, obviously we do that via webinar as well, so go to the back office, sign up for it if you haven't already, or just go to the webinar live page that some of you may already be on at 7 p.m. Mountain Standard Time, and you'll be able to watch it there as well. The scalping symposium that we'll be doing on Friday will be broadcast. I think Troy is going to broadcast through our channel as well, and so you'll be able to watch that scalping symposium, at least Troy doing it at that time as well. Thanks for coming out, guys. Appreciate it, and look forward to talking with you guys tomorrow. Thanks. My pleasure, John. My pleasure, Brett. Good to see you guys, and have a good one. Thanks again.